Okay, hey, what's up, guys? It's Jamie. I'm going to shrink myself down here pretty quick because I'm really not that important. I'm just trying to show what I'm doing, and I use my phone. So just a middle-aged dad, father of four, trading stocks, options, cryptocurrencies, and investing in real estate, and myself, okay, and which is what I think you should do. So I do this. I document this stuff, mainly hoping that my kids will see this and learn something, but I also share it with friends and family. So I'm not a guru or a guru. I'm not an expert at this. I'm just sharing what I've learned over the past few years. So what I wanted to share really quick was I was in Volta, and I took some of those shares and I put them into Amazon. So I'm going to show you with the Robinhood account, because Robinhood is just one of many accounts you can have. I have Robinhood, I have Webull, I have Thinkorswim, which is TD Ameritrade, and I have other ones. But use whatever's best for you. One of my bosses, my big bosses, and I were talking about cryptocurrencies. We talk about it from time to time. We're talking about XRP, which I think is something that I will add to, and XLM, but XRP specifically. And then I was asking him if he had any Amazon. He's like, I'd like to get into that. He goes, but I don't know how. So we were talking about platforms and how to do it, and he had no idea. He's in his mid 50s, late 50s, and he's in a position where he can do that. He just didn't know how. So it doesn't matter how old you are. You want to keep it simple. And for me, this platform is Robinhood of the many that are out there. It's pretty easy. So let me just show you what I got going on here. Okay, so I'm going to disappear. All right. So in this Robinhood account, is doing that because I have something on my screen. All right, you can see Volta, right? And it says that my equity is $4,000. And my equity, that's what that is. Equity in Amazon is $18,000. Now that's not actually true, okay? And I'm going to point that out first because up here you can see it says $10,000. Well, why does it say 17 here and 4,000 there? Well, because I have a margin that I'm using, right, that is allowing me to have a greater position. So if let's say that Amazon, I have 145 shares as I do this, and 1,800 shares of Volta, 145 of Amazon, and 1,800 of Volta in the Robinhood account as I record this. So if Amazon went up to, I don't know, $500, then I wouldn't make that much money because I have to pay back the margin that I'm borrowing. I'd have to figure it out, but I'm just like, I had to use what I had available, and it basically doubled what I had. So if I had 5,000, it gave me 10. So if it went up double, right, and it went from, let's say I had a $10,000 position, it became 20, I would make an extra 5,000 profit, not the whole 10. I don't get to keep that because I don't own those other shares. It's just margin I'm borrowing. So how does it help me? It helps me because I can sell covered calls. Now I have 45 shares because I didn't want to eliminate my Volta shares. So I guess I'll start there. I wanted to keep some because I still like Volta. It's just that it's not quite going where I thought it would go fast enough. So Volta, I'm just going to show you again. Charts aren't technical analysis stuff. I'm not a master at, but I can tell you that when I look at what's been going on, you can see that it kind of had been on an uptrend. So I thought, hey, well, maybe it's going to get up in time before the split. It's kind of going up here, and it topped off at 259. My position is 281. When I had the 3,500 shares. So obviously, I don't want to take a loss. I prefer to at least get close to even or make a little bit of money, or a lot of money. But it just doesn't always go that way. So I had to make a decision. If I didn't want to add more money to the Robinhood account, which I don't, I wanted to show how if you take $1,000 or $500 or whatever it is you invest and you slowly grow it, I'm trying to take $1,000 and get you to 100,000 before the year end. So I'm like, okay, Volta is not moving fast enough, for whatever the reasons, the market, the world, Ukraine, the war going on in Ukraine, which could spill into a bigger deal, the inflation, the gas price, everything that's happening. I'm like, it doesn't matter. It's just not moving fast enough. So I have to be patient, but in order for me to achieve my goal, I had to make a decision. So I eliminated 1,700 something. Let's see here. We can go down to history. I eliminated 1,750 shares. Okay, so at $2.44. So let's look at that for a second. So my average cost is $2.81 minus 2.44. So I lost 37 cents a share times 1,750. So essentially I lost $650, right? If I just round it off, that's my loss. So, but I retained 1,800 shares, but I freed up $4,300 almost, right? Again, just rounding it off. So now with that money, it becomes, $8,600 because that's what the margin does. It gives me double. So I go back to Amazon, and with the cash I had available, I bought some shares. Okay, so you can see the history. I'd already had one, and with the one that I had, that became 20. All right, so the one share I had on June 3rd, okay, right here, at $2,447, became 20 shares. And then, it shows you the history, 20-to-1 split. So at my average cost, it was just whatever 24.47 divided by 20 is, that's going to be my average cost. And then I started to buy some shares, okay, mostly right here, where I bought, I had 5 shares here, and then I think 80 shares there, okay, which at the time gave me a total of 105 shares, okay. And then with 100, I wanted 100 shares. With 100 shares, I was able to sell a covered call. Now, why is that important? For me, it's important because I want to keep the shares anyway. I don't plan on selling them, right? I have no desire to sell them. So at the time, it was trading at about $123 maybe, and almost 124. So my strike price was 130. So the difference between, say, 124 and 130 is $6. So if I got executed, right, like if it expires on the 10th, which is this Friday, if that happened, then I make the spread between 124 to 126. So it's $6. $6. Okay? And then, so I make $100 times, $1 times 100, which would give me a profit of $600. Right? Now I lose the shares, right? If it goes into expiration, but I also get this. I also get this 146 in premium that I collected if I carried it to the full, expiration date. It's a very good zero. All right, plus the 146, so that gives me a total of $746. So the reason I'm showing you that is if I go over here and I minus that $747, then essentially I'm up $100, right? If it did that, so I'd cover my loss, and I'd make a profit of $100. So I already squashed in 1 week the loss that I took to own $100 share. So sometimes you got to go backwards and go forward. I didn't need to do that. I could have just added money to buy the other shares, but I'm just showing you some strategies here. If you're like, okay, I only have this much money. One, I don't have enough to buy all of the Amazon. Now, what's the worst case scenario with Amazon is it goes to zero, which I don't think that would happen, but I mean, I guess it could. But I could lose the value of the shares. And if I get a margin call, then of course I got to sell some of those shares to cover the call, which is a different topic. So for now, I'm just going through the history here. So you can see here, so now I own 145 shares as the time I kind of do this. But what I decided to do was to sell my callback, okay? So I owned it for $146, and when I sold it back, right, I basically made $106. Right, because if you are selling a call and then you buy it back, you want to buy it at a lower price. So I was up 70% on my option. So I said, I'll just take the $106 and lock that in, right? Because then I can free up my shares. So now I have $106. So if you're wondering how that is, it's because I collected a premium of $146, right? Because they paid me to sell my 100 shares at $130. So I essentially sold them back, right, for $40. So I got to keep the difference of $106. So I pocketed that $106. So that's more than I made with Volta holding it for weeks and weeks. So I've already made $106. So then I put an order in where I said, hey, you know what? If it goes up to $173, which is a weird number, but I was like, you know what? If it pops up there, I would sell all 145 shares, right, of $173.20. Now I own it at the moment at $2. Oh, I'm sorry, that's Volta. I wish I owned it for Amazon. I own it for let's see, $123.20. That's what I own it for. I always put my line there, $123.20. So if it went, and that's why I put $173.20 as a option of saying, okay, well, I own it for $123.20. If it goes up to $173.20, I make a $50 profit, right? So 173.20 minus 123.20 is $50 times 145 equals 72.50 times 100. Oh no, what am I doing? $50. Right, I make $50 times, because I have 145. So times 145 shares equals 72.50. Okay, that's what I'm looking at. So that gives me a profit of 72.50. I got my math was wrong there. Okay, so if I had $50 profit per share times 145 shares, I make 72.50 profit, right, before taxes or whatever. Now, if it's $173.20 times 145, that's 25,114, which is what this number is over here. 25,114. Okay, 25,114 matches the number of selling the shares at 173.20. So at my cost, my profit was basically a little over $7,000. Now, I'm not expecting that. I was just saying that I'll take that and get back in. But in the meantime, I'm just going to keep selling those covered calls. So now if I go trade options, I mean, this one ends Friday. If I wanted to get back in, depending on my strike price above what it's currently trading at, right now it's trading at 122.71. So basically 123. So depending how much over 123 I was willing to take, I have 100 shares of one contract. If I want to sell a covered call, then I would go, okay, 123 is what I own it for, just for argument's sake. So if it goes up $5, 123, 24, 25, 26, 27, 28. We're going to go up to 128. At 128, if I said I want to make a $5 premium, I would go right here and say, okay, I can make $50, right? Not a lot of money, but I'll take it. If I'm going to hold them anyway, a lot of interest here, a lot of volume, okay? So if I was to sell that, I mean, the spread's pretty tight, I'd make $50. Now, granted, if it gets filled, I'll lose most of my shares, but I make that the $5 times 100, $500 plus the $50. If it doesn't go there, I keep them anyway, and I make $50. I already made 100, so I make $150, $160 in 1 week. Now, I'd want to maximize that as much as I can, but as Amazon climbs in value, so will the premiums. So that's why I think Amazon is a good long-term play. So I will keep doing. If I only make $150 a week, just to give you an example, if every week I just locked in $150 a week, $150 times 50 weeks is $7,500. Okay, $7,500. Now, what's my investment in Amazon? So as I do this, my investment was, this says that my shares are worth $17,792 because I have 145 shares. But my investment in Amazon was, let's say, what was it? 123.20? Is that what I said it was? 123.20. Okay. So 123.20 times 100 shares is $12,320. Forget about the other 45 shares. So the contract that I'm locking up week in and week out, the other 45 shares I can buy and sell. I can sell and rebuy again and make it another 5 shares, another 10, make it another 100 shares if I want to. We'll see how that goes. But the 100 shares I have, I plan to keep, and if I lose them, I want to buy them back. But right now it stands me $12,320. So $7,500 divided by $12,320 is 60%, right? So I'd make a 60% gain, or I'm a 61 for my investment. Now that would change because every week I'd have to, if I lost the shares, I would have to pay more, right? So that premium share. But let's say it's 40%. Let's say it's 30%. Either way, it's better than the annual return that you stick in the stock market and just hope that you get your 8-9%. And some years have been higher than that, but on average, where else are you going to get that kind of return? So that's what I'm doing with my $12,000, $13,000, $15,000. When I say this, is I want to keep selling that premium over and over again, right? Or collecting that premium over and over again. And if the stock with those other 45 shares, if it goes up to 135, 145, 155, I mean, the analyst ratings don't really matter. They change all the time. But right now, there's 59 analysts. They say it's worth as low as 112, a mid-range of 178, and a high of 232. So, hey, say it went somewhere between 110 and 170. I'm still going to make a profit on those 45 shares that I sold. So what's the difference between 178 and 112? 66 divided by 2. So let's say it goes to 112 plus $33, which is about mid-range, 145, right? Minus my 123. Oh, 123, $22 times 45. I can make $1,000 profit in the interim. If it does go up somewhere in that range, I can make $500 to $1,000. And I'll keep doing that now. I'll just keep buying shares. I'm looking at Amazon ultimately. I'm looking at Google next as my ultimate next 100 shares. But this is how you take the account and you start to grow when you start to see some action. If it stays stagnant, then you're not doing anything, right? So a month ago, I was around $8,000, down $900. Then I got up a little bit, right? It came down. So you can see there's ups, there's down, but you got to keep it. Even if you get a setback, you got to say, all right, let me recalculate and get back up. So now I'm currently over 10. I mean, it could drop below that again, depending on what happens here. But my position here, for the day is like I'm down a bit. I want to keep gaining ground. I want to get this number, into the teens next. I'm already in the double digits. Now I want to get into the teens. And then once I get in the teens, right, it's going to be easier once you get up. You're just trying to get to the next level, just like this. Next level. Oop, fell back a little bit, next level. Oop, fell back a little bit, next level. So, you want to kind of keep scaling and moving yourself up. All right, that was kind of a longer video, but, I hope it makes sense. I hope it helps you to kind of, maybe at least see what I'm doing, right? Just in comparison to what you do. Now, you may do it better than me. Certainly, you might be like, Jamie, that's ridiculous. Okay. I'm not telling you do it this way. I'm just saying this is what works for me. This is how I lock in some profits. This is how I'm buying businesses that make sense for me. I'm like, I like Amazon. I like Google. I like, wiper blades. Sorry. I like Google. I like Amazon. I like Tesla, amongst other businesses that are, to me, are recession-proof, meaning that most likely they will continue on even if we have a couple, several months or even a year or two of really hard times. And that's what's happening. So you still got to find a way to make your dollar grow, because sitting in your bank account is not doing you any good, right? Other than like, I need to pay bills, I need to put gas in my car, $10 a gallon. I need to eat, right? I mean, you need money, but I'm just saying, like, if you're like, oh, this money is 20 years from now, I'm going to be so happy I have that money saved. I don't think so. you got to find different ways to do it, and this is just one way that I'm sharing here. All right, I rambled on enough. I'll see you guys next time. Have a great Wednesday.